Hi, everyone. This is Jeff Praissman with Interactive Brokers Podcast. It's my pleasure to welcome back Scott Bauer of Prosper Trading. Hey, Scott, how are you?
I am great, Jeff. How about you?
I'm doing well, and I love these Wednesdays when you pop into our studio for our 5-minute conversations on the market. And for our listeners, you can find more from Scott at prospertrading.com and also on our website as well. So, Scott, obviously, crazy day with Oracle. We were just
Son,
discussing it before the recording that never seeing anything like this in recent memory, at least, a stock
exactly.
that large.
It certainly was not on my bingo card. I'm sure it was not on yours. It's not on anybody's I know about. And it's absolutely stunning. And I think that this maybe goes into a little bit of a bigger picture because last week we saw tech stocks really on their heels, right? A big decline. And a lot of people were saying that the AI trade is over with, cloud stocks, blah, 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 blah. And then all of a sudden, here we are. Look to today. Yes, Oracle is leading this rally here. But I think what we have seen is that the AI trade is not over with. Now, maybe you have to be a little bit more selective on some of the stocks, and it's not 2000, right? It's not the Nasdaq of 2000 where any of these companies with valuations that are just out there are going to do well. But the big players, man, oh man, they're just killing it, Jeff.
I know it's funny that five calendar days ago, it was the largest single day decline, and now we have
Yep.
this all of a sudden. Also, that day as well, September 5th, the employment report came out. It shows some mixed signals with wage growth accelerating while job additions slowed. A couple of healthcare gain while a few sectors kind of declined, like manufacturing and business services. How might, Scott, how might this data impact the Fed's decision making at their upcoming meeting?
I think what they're going to do is take all this recent data and say, yeah, things are slowing down quite a bit, especially when you add in the revision that we just saw, another 900,000 jobs that really weren't created. So I think we are going to see a more aggressive Fed. I still believe they're only going to cut a quarter. There are now some probabilities and some thoughts out there they may cut 50. But I think what we will see moving forward is a more aggressive bias for further rate cuts, whether it's October, December, going into first Q of next year. I think we're going to see a big time bias now to cuts. Probably, in my estimation, we're going to see full point cut probably by January, would be my guess.
Got it. And leading into this upcoming week, starting tomorrow, we have the consumer price index data going to be released, and that's a number that's really closely watched by the markets.
Yeah.
What are your expectations, and how might different inflation scenarios kind of impact various market sectors?
We've seen inflation be really sticky, and the markets still just have this Teflon armor to it that it didn't really matter. Now, maybe that narrative changes a little bit because we got PPI this morning, which was much lower than expected. And with CPI tomorrow, it is absolutely going to be closely watched. But if it is in line or actually slightly lower than expected, boy, that will really ratchet up the pressure on the Fed.
Yeah, and currently the futures is pricing maybe a 65% chance of a rate cut. I know we just spoke about this, and you're pretty confident that's going to happen. Any other factors, though, that will ultimately determine the Fed's decision for upcoming meeting for September 16th and 17th?
They have made it clear that they were focused on the jobs market. Yes, inflation's sticky, but they have been laser focused on jobs, on unemployment, on wages. And you know what? The data recently has not been really good, which really feeds into the narrative of, okay, time to cut rates. So we'll see what the perception is next week when they talk. We'll see what Powell is like. Is he really going to put on the big time dovish hat or not? But I really believe that they have got to believe now that with these revisions we've seen, with wage growth really moderating here, that it's got to be pretty dovish, in my opinion.
And that kind of leads me to my final question, which historically September's really been one of the weakest months for performance. And we're approaching midpoint. And obviously, as we just discussed, a ton of factors coming in that could either break the trend or kind of hold it true. And I sum it up, it seems like it really does just depend on the Fed's decision at this point and some economic data. Anything else that would even have an input on this, or is it really down to those two things?
If you think about it, Jeff, if we go back just even a few weeks and talk about all the things that really could have impacted the markets, let's start it with the NVIDIA earnings, right? In NVIDIA earnings, then we had the jobs number. Now we have more inflation data, and yet the market is just resilient and rebounding. September, we talked about this once before. The historical tendencies of the market really have not held true this year. If you go back earlier in the year with the January effect, and then we saw if you sold in May and went away, you really got hurt.
Right.
So August was a pretty good month. And I know September is historically the worst month, but definitely would not surprise me to see this upside bias hold. Now, we may give back a little bit, right? The market has been on such a run, but boy, oh boy, the way the market is moving here is really hard to fight the trend. That being said, as we have discussed, as you and I well know from experience, great, let the market do its thing, let it run, but buy that protection. We always talk about that. Buy that protection when you have the opportunity.
Absolutely. Scott, this has been great as usual. And again, for our listeners, you can find more on Spotify, Apple Music, all the usual suspects on our website under education, and also check out prospertrading.com for more from Scott. Until next time, thank you.
Thanks so much, Jeff.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell, or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives, or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances, and, as necessary, seek professional advice.